Hey guys, thanks for tuning in. In this video, I just want to share some moves I've been doing in my portfolio over the last couple weeks. I've bought in some new stocks, I've added to some positions, I've also trimmed a couple positions. So we're going to get into all of that in this video. If you don't mind, before we get going, I'd really appreciate it if you just hit the thumbs up button. It really does a lot for the video, for the channel. So I'll just give you a second to do that. And now that that's done, we're going to get into the video. So high level, over the last year, my US portfolio has really been driving lots of the growth in my overall portfolio, up 18%. On the Canadian side, in the last year, we are just up 2%, or about $3,000. So overall, up about 8-9% in the last year, up about 10,000 Canadian dollars, give or take. But in the last month, we've seen my portfolio go down a bit. Some of my stocks have been trending down over $3,000 in the Canadian portfolio. But the US portfolio has actually been doing fine in the last month, actually up 4%. But that's really case by case. So I'll get into that a bit in this video. The first thing that I've been doing, in addition to adding some new cash to the portfolio, I've been selling some of my high interest ETF. So this is where I've been storing lots of cash. I've shared this a couple times in the channel, but you can kind of see it just holds around 50 bucks a share, and then as the month goes on and accrues interest, the stock will go up, or the ETF will go up to about 15, 20, depending on what interest rates are, and then as soon as they pay out the distribution for the month, will go back down. So it's really just a high interest savings account. I used to have closer to 320 shares in this. Now I'm at 270, so I've sold about 50 shares, good for about 2,500 bucks, just to help dollar cost average into and down on some of my other positions, given that the market has been going down, or at least my portfolio has been going down, and I see some more interesting opportunities. So this has really been where I've been sourcing lots of the cash from to buy other stocks. Looking into what stocks I've been buying, I'm going to start on the US side because most of the stocks I've been buying are US stocks. The first one is Coca-Cola. So Coca-Cola is a stock that I started buying around $58, $59, giving the 3 month here. It was probably around here at the end of March, 58 to 59, and it very soon not ballooned, but went up about 10%, which is big for a stable company like Coca-Cola, to around 65 bucks. So I only had about 30, 40 shares in this, so it was only about 1.5% of my portfolio at the time. I've used the dip over the last couple weeks from $64 down to 60 here today to continue to add more shares. So my dollar cost average is still up versus my initial buy, but I feel a lot more comfortable with this stock around 60 bucks. I think they're going to do about $2.50 of earnings. So I'm paying around, 24 times earnings. I'm not going to get rich off this stock, but I do like the fact that they pay a nice 3% dividend yield, 2.9 right now, and they increase it every single year. So it's like a longer term yield on cost play for me. Hoping to get this to about 100 shares in the short term, and then we'll go from there. So liking that, that's one that's been trending down. That's one that I've been freeing up cash to build into a more meaningful position instead of having, a $2,000-$3,000 position in this account. The second stock that I actually added, and this is one that I've added and sold a number of times over the last year, given the volatility in the stock, is Airbnb. So Airbnb is on pace to do about $3.50 of earnings this year. So it's trading right at 30 times earnings, but they've really showed their ability to grow well over time, growth in their cash flow profile. They're actually starting to buy back shares, mostly just to dilute new shares being released as compensation, but also lowering the share count a very modest amount. So I like that they're not going to be diluting, or it doesn't look like they're going to need the cash flow to do other things, so they can kind of offset that dilution for me as a shareholder and continue to grow the business organically. Now, even in the last few weeks, I've bought in this company at $100, $506 and kind of sold out as it's gone up into the teens before, just because once we get over a 30 multiple it does get a bit more expensive, and there are other options out there. So I've always bought this one around this range with the hopes that it goes down so I can actually build a real position out of it. So right now I have a measly 2 shares. Just bought this today, hoping that I can get this up closer to the peak position I had, which was closer to 75 shares, I think, 50 to 75 shares. I dropped those on this earnings report at about 128, 129 a share when it went all the way up to 140. Thought the multiple was just way too high on it at that point. So I don't like trading in and out of stocks too often. This is one, though, that I've done it in the past just because we're right at the peak of what I think is a fair valuation for the company, even though I love the business. So on the weakness, took the opportunity to buy a couple shares there. Wasn't a big deal. The other new position that I entered was Topgolf Callaway. So I've been adding into this one over the last week. You can kind of see in the last month, this stock fell off a cliff after earnings. They lowered their operating income guidance, even though they still have very strong revenue growth guidance as they open up more and more Topgolfs. They're going to do about $4.5 billion of revenue this year. They have about 200 million outstanding shares. So the company's trading for under $3.5 billion valuation. So under 1x revenue, on $4.5 billion of revenue, longer term, once they roll back the capex, if they can operate at a 10% net income margin, which given their gross margins, I feel like is very feasible, they'd be making over $400 million a year. And at the current valuation, that would be like an 8 times earnings for this company. So I feel like they're investing in top line growth right now. They're investing in expanding Topgolf, but long term, paying under 1x, far under 1x revenue for this business may turn into be a good opportunity. It's probably one of my more speculative plays. That being said, still a very small position, under $1,000. I wouldn't mind getting to 100, getting to 200, getting to 300 shares on this, making it $4,000 or $5,000. But I definitely won't make this into a huge position for my portfolio. One stock that I, like Coca-Cola, have been trying to average more into has been Realty Income. So Realty Income, obviously, I believe the largest retail owner in the U.S., owns properties in 52 states, also owns property in the U.K., Italy, Spain, really expanding their business. They started trading down in the last week or so. So similar to Coca-Cola, have been trying to use it as an opportunity to build a real position in the company. Same objective, trying to get to 100 shares first, and I'll see how it goes, see how an earnings or two go, see if this is one that I want to turn into 200 shares, 250 shares as a U.S. REIT to own, because right now all my REITs are Canadian REITs aside from this one. So maybe a good opportunity for some diversification. I like the monthly dividend that they pay. They tend to grow it over time. Company's paying right at a 5% yield. So I like that dividend that I get from Realty Income, looking to add to it a bit more. And those are really the ones on the Canadian side for the most part. Sorry, the US side. A couple other ones that I'll just mention super quick. I bought 2 more shares of Visa down in the low 220s. I love Visa for the long term. It is a more expensive company, but I always like buying it on a dip. Kind of just see here on the week down over 4%. So I thought that would be a good opportunity to just nibble on 1 or 2. And then Wyndham has been one over the last couple weeks I was buying, and it's just roared in the last couple days behind acquisition rumors from Choice Hospitality Group. So I'm up about 8% overall. What is that? About $80, give or take. So I'll see how this plays out. Obviously, given my 15 share position, if it goes back down, if the deal doesn't go through or they don't come to terms, that's fine. I'm happy to build this into a bigger position. This is a royalty-based business model, buys back lots of shares, increases their dividend over time. Obviously, a bit of a cyclical business. If they happen to get bought out for $80 a share or something, I'm happy to take my 20-25% gain in a week, despite not really having a big position in it. So I'm just on the sidelines on this one, not really looking to buy any more here until the dust settles a bit. Going into the Canadian side of my portfolio, I haven't been buying too many shares. Just going to highlight a couple. A&W is one. I don't own A&W in any of my other brokerage accounts, so it is a big position for this account, but overall not as relevant as it seems in this account. So I have been wanting to get this position closer to 500 shares. I've been buying it on weakness. So it's kind of flatlined a bit here over the last month. anytime it's under $37, I believe that means its yield is around 5.1, 5.2%. That's where I feel like it's at a fair value, and I don't mind buying for the long term. They tend to increase their dividend by a couple percentage points every year, so getting in a average yield on cost in the low fives over, the next decade or so should turn into a 6-7% yield on cost as I get a high starting yield as well. Pretty safe industry too. Essentially a quick service restaurant, really popular here in Canada. So that's what I've been nibbling in a bit, not too big. And then the only other ones I've been kind of interested in has been ZDI, which is an international dividend ETF. It's really ramped up in the last kind of 6 months or so, but I do like having some exposure outside of North America into Europe, Japan, Australia. I think's in here as well. So I've been nibbling on that one. And then similar to Visa, one of my favorite stocks on the Canadian side is CN Rail. This one has been hanging out over 160 for quite a while here, even went up closer to 170. See, it kind of just dropped off a cliff the last 2 days. So I went ahead and bought 3 more shares in this account. Have 72 total in this account too, but I own CN Rail in every single investment portfolio that I have. So I think it's my biggest position overall. Didn't mind grabbing 3 more up today. The company trades at just over $100 billion valuation. I think the current multiple is actually closer to the low 20s, call it like a 21, 22. And while they pay a 2% starting yield, they increase their dividend pretty much double digits every single year, if not double digits, like 8, 9%. So it's really a longer term play to have a growing stream of income in your portfolio. Great mode on this business, operates in great economies, and has a very diversified book of business across the continent. So love this business. We'll always buy it on weakness. They constantly buy back shares. They constantly increase the dividend every year. Great management team. Really hard to compete with those types of businesses. They're not building new railroads. So that's kind of just a summary of the stocks I've been buying. As you heard, I've been liquidating some of my high interest cash ETF in order to make some of these purchases. I've also been adding in some new capital into the account, but that's really the purpose of this cash account, or this cash holding really, is just a place to make 5% as I wait for opportunities. And as the market's dipped, or my portfolio's dipped 3-4% in the last month, I found that just a great opportunity to source some of that cash to get higher yielding or better long-term yield on cost options for those dollars to be allocated to on either fair value or what I feel to be a bit of a discount depending on the stock. So hope you guys liked this video. If you did, be sure to hit the thumbs up button. It really does help the channel. Consider subscribing to the channel. We're growing the channel quickly, so I'd love to have you along for the ride. Let me know in the comments if you have any thoughts on any of these stocks, and I'll see you guys in the next one. Thanks.